Imagine a secret meeting happening not in a dimly lit boardroom, but across the globe through coded financial transactions and strategic geopolitical moves, where the world's most powerful investors and institutions are silently acquiring two specific assets at an unprecedented rate. And these assets aren't rare earth metals or a new tech stock. They are the currencies of Iraq and Vietnam, the Iraqi Dinar and the Vietnamese Dong, and this quiet accumulation is based on a simple, powerful belief that a financial event of historic proportions is on the horizon, a revaluation that will reprice these currencies to reflect the true, explosive economic potential of their nations, effectively transferring immense wealth from the unprepared to the pre-positioned. And while the mainstream financial news cycles continue to obsess over the Dow Jones and the S&P 500, these elites are playing a different game entirely, a long game focused on macroeconomic shifts that most ordinary people are completely unaware of, and the timeline they are working towards, the point of convergence for a perfect storm of economic reforms, political stability, and international pressure, is the year 2025, which is why right now, at this very moment, you are being given a choice to either dismiss what you are about to hear as mere conspiracy or to open your mind to the interconnected data points that form a compelling case for one of the greatest wealth transfer opportunities in modern history. Let's begin with the Iraqi Dinar, a currency that has been the subject of hope and skepticism for decades. But to understand why the landscape is fundamentally different now, we must look past the headlines and into the concrete actions being taken on the ground in Baghdad and in the halls of international finance. The first and most critical piece of this puzzle is the deliberate and systematic dismantling of the petrodollar system that has defined Iraq's economy since the Saddam Hussein era for decades. Iraq's oil wealth was exclusively traded in US dollars, a system that necessitated a weak domestic currency to facilitate this exchange. But that era is conclusively ending, as Iraq is now actively signing oil and gas agreements with global superpowers like China, India, and major European nations that are settled in other currencies, including the Chinese yuan, the euro, and even through bilateral barter deals, a strategic shift that severs the foundational link that once demanded a devalued dinar. When a country's primary export is no longer tethered to the US dollar, the entire monetary policy of that nation must be re-evaluated, and a strong, internationally recognized currency transforms from a liability into a critical asset for asserting economic sovereignty and engaging in global trade on its own terms. This is not a speculative theory, it is a visible, documented process, evidenced by Iraq's 25 federal budget, which is the most ambitious and structurally sound in its recent history, projecting revenues based on a conservative oil price that creates a significant fiscal surplus, a clear indicator that the government is building a financial buffer specifically designed to stabilize the economy during a major monetary transition like a currency revaluation. Furthermore, the physical rebuilding of Iraq is accelerating at a pace unseen for generations, with the cornerstone being the multi-billion-dollar development road project, a massive trade and logistics corridor that will physically link the Persian Gulf to Turkey and Europe through a network of high-speed rail and modern highways, a project that has already secured foundational funding and international partnerships from Qatar, the United Arab Emirates, and Turkey. And such an immense infrastructure undertaking, one that aims to position Iraq as the new central trade hub between Asia and Europe, cannot be financed, built, or operated with a currency that is globally dismissed as unstable or worthless. It requires a strong, credible currency to attract further foreign investment, pay international contractors, and establish financial confidence. Simultaneously, the Central Bank of Iraq has been engaged in a ruthless and necessary campaign to clean and modernize the country's financial sector, shutting down hundreds of non-compliant local exchange houses and aggressively implementing international anti-money laundering and counter-terrorism financing standards, a process that has caused short-term pain and liquidity tightness that skeptics point to as failure. But in reality, these are the essential, painful growing pains of building a transparent, modern banking system that can withstand the scrutiny and volatility of a global market once the dinar's value is reassessed. The World Bank and the International Monetary Fund have transitioned from offering mere stabilization advice to providing active hands-on technical assistance for monetary reform, focusing specifically on modernizing Iraq's payment systems and enhancing the central bank's capacity to manage a floating or revalued exchange rate, a level of involvement that signals a profound belief in Iraq's imminent financial transformation. Every single historical obstacle to a revaluation, political infighting, financial corruption, and a primitive banking system is being systematically, methodically, and publicly addressed, not with promises, but with enforceable laws, institutional reforms, and tangible projects. creating a foundation of stability that simply did not exist 2 years ago, a foundation that the global elites are reading about in their confidential briefs and acting upon, positioning themselves accordingly before the official announcement makes global headlines and the window of opportunity slams shut for the general public. Now, let's pivot from the oil-rich deserts of the Middle East to the bustling manufacturing heartland of Southeast Asia, because the story of the Vietnamese Dong, while running on a parallel track towards the same destination of revaluation, is powered by an entirely different engine, not one of post-war recovery and resource wealth, but of sheer, unadulterated economic hypergrowth and strategic global relevance that has fundamentally outpaced its monetary representation, creating a disconnect so vast that it presents an arbitrage opportunity the likes of which the financial world rarely sees, an opportunity the elites are leveraging by positioning themselves in the Dong before the market corrects this glaring miscalculation. Vietnam is no longer an emerging market in the traditional sense. It has forcefully and decisively emerged as a global economic powerhouse, consistently ranking among the world's top 5 fastest growing economies for nearly a decade, a period during which it has successfully transformed itself from a low-cost labor hub into a critical, high-tech manufacturing nexus for the world's most valuable corporations, including Samsung, which invests billions annually and produces over half of its global smartphones there. Intel operates its largest single assembly and test plant globally in Ho Chi Minh City, and Apple, which is aggressively shifting its iPad and Apple Watch production lines to Vietnam in a clear and strategic diversification away from China. This monumental influx of high-value foreign direct investment creates immense, sustained upward pressure on the Dong, a pressure that the State Bank of Vietnam has had to actively and expensively fight against for years by artificially suppressing its value within a tight trading band. A strategy they have employed not because their currency is weak, but precisely because it is naturally too strong for their previous export-led growth model, and they have needed to maintain competitive export prices. However, this strategy of suppression has a finite lifespan, and we are witnessing its expiration date approach in real time, evidenced by Vietnam's foreign exchange reserves, which have ballooned to an all-time high as the central bank is forced to buy up billions upon billions of US dollars to keep the Dong from appreciating too rapidly, building a war chest of financial stability that now gives them the confidence to eventually let the currency find its true market-driven value without risking economic shock. The geopolitical winds are furnishing a perfect storm in Vietnam's favor, as the China Plus One supply chain diversification strategy becomes a permanent operational mandate for virtually every major corporation in the world, and Vietnam stands as the undisputed #1 beneficiary, a position of immense strategic leverage that it is now using to negotiate more favorable trade terms and promote the international use of the Dong in bilateral settlements, particularly with China, its largest trading partner, a crucial step in building the infrastructure for a globally accepted currency. Internally, Vietnam's own economic anatomy is changing dramatically, with a burgeoning consumption-driven middle class creating a robust domestic economy that is less reliant on exports alone, providing a strong internal foundation that can support and even benefit from a stronger currency, which would increase the purchasing power of its citizens, reduce the cost of imported goods and raw materials for its factories, and help curb inflation. The final, powerful catalyst looming on the 2025 horizon is Vietnam's relentless pursuit of an upgrade for its stock market from frontier to emerging status by major index providers like FTSE Russell and MSCI, a recategorization that would automatically trigger hundreds of billions of dollars in mandatory inflows from global pension funds and ETFs that track these indices. But this coveted upgrade is critically dependent on one key criterion: the establishment of a stable, accessible, and freely convertible currency, a hurdle the current managed rate actively prevents, creating a powerful institutional incentive for the government to finally allow the Dong to revalue and float more freely to unlock this transformative wave of capital. The narrative that a weak currency is essential for Vietnam's success is an outdated relic of its past. Its current and future competitiveness is secured by its skilled workforce, political stability, and irreplaceable role in global tech supply chains, not a cheap currency, and the elites accumulating the Dong understand this fundamental truth, seeing the manufacturing data, the FDI records, the soaring reserves, and the strategic geopolitical positioning not as isolated data points, but as interconnected threads of a single, inevitable monetary conclusion, making the Vietnamese Dong not a speculative gamble, but a strategic investment in an established economic juggernaut whose currency is fundamentally mathematically, and profoundly undervalued. So here we stand at the convergence point, watching two powerful, independent narratives from opposite corners of the globe: Iraq's story of sovereign rebirth and Vietnam's tale of economic ascension, barreling towards the same financial climax in 2025, a year that is not a random date plucked from speculation, but a calculated forecast based on the culmination of legislative, infrastructural, and macroeconomic deadlines that together form a point of no return. And the silent preparation of the global elites is the most telling indicator of all, because these individuals and institutions do not make moves based on forum posts or hopeful rumors. They act on cold, hard intelligence from the World Bank's country-specific reports, the IMF's detailed article IV consultations, and confidential geopolitical risk analyses that all point to the same conclusion: that the conditions necessary for a currency revaluation are being met with a speed and determination that has caught even seasoned observers by surprise. And their strategy is not to wait for a public announcement, but to position themselves in the quiet before the storm, acquiring physical currency and financial instruments at today's prices for an event they see as an inevitability, not a possibility. This is the critical nuance that the average person misses. The revaluation will not be announced with a press conference or ticker tape parade. It will be a technical decision, likely framed as a monetary reform or redenomination for Iraq to shed the baggage of its past, or a significant widening of the trading band, and a transition to a managed float for Vietnam. And it will be executed over a weekend or during a holiday when the global markets are closed, allowing for a controlled recalibration of the global financial system's pricing of these assets before the gates reopen. When this happens, the transfer of wealth will be both instantaneous and historic, moving from the hands of the skeptical, the uninformed, and the latecomers directly into the portfolios of those who had the patience to see the larger geopolitical chessboard and the courage to act upon that conviction with decisive action years in advance. The initial surge will be just the beginning, as the psychological impact of the IQD and VND being recognized as legitimate, strong currencies will trigger a second wave of institutional investment and public frenzy, creating a feedback loop that pushes valuations even higher as the world scrambles to get in on a trade that a select few had already secured. This is the nature of true paradigm shifts. They are never obvious to the crowd until they are already in the rearview mirror. And by then, the life-changing gains have been captured by the pioneers who understood that the most valuable commodity is not money itself. Foresight, the ability to connect disparate data points into a coherent picture of the future. The information presented to you in this script is not fantasy. It is a synthesis of public records, economic data, and observable geopolitical trends that form a logical, sequential argument for why 2025 represents a pivotal moment. And the choice you are faced with now is the same one that has presented itself at every major financial inflection point in history: to dismiss the evidence due to the noise of past disappointments and the comfort of conventional wisdom, or to accept that the world is changing and that this change creates opportunities for those willing to look beyond the headlines and do their own rigorous due diligence. The path forward requires you to become a student of this situation, to seek out the primary source documents from the Central Bank of Iraq and the State Bank of Vietnam, to read the IMF reports for yourself, to follow the progress of the development road and the quarterly FDI figures flowing into Vietnam, and to build your own unshakable conviction based on facts, not faith. The global elites have already made their choice. They are quietly preparing, moving with a purpose that transcends public discourse. The question that will define your financial future is simple: will you